American Express, the card for those with the deepest pockets. I'm gonna dive into the annual report, which is something they have to legally file every single year and tells you almost everything you want to know about the company. For example, the fact that there are 141.2 million cards just out and about in the world. Before we dive into the revenues, how exactly do these little plastic things work? I'm covering it because I don't want to give any of you guys any of my credit card information, and I don't want to really blur it in the edit. So that's what you get. Let's say you're out and about in the world and want to buy some bread. You tap your card on the machine and it sends a signal to the processor, who sends a signal to the network. Some examples are Visa, MasterCard, Amex, and Discover. Generally, you can see who's your network by looking at the corner of your card. Some exceptions are when the issuer is also the network. For example, in Amex's case. You can tell who your issuer is by who gave you the card. Anyway, the network asks the institution, do they have enough money? The institution says yes or no, who sends a signal back to the network, then back to the processor, and says accepted or declined if you have no money. If you guys did want a better video to explain all of this, I did link one down below in the description, so guys, check it out if you want. Whenever you tap, swipe, or insert your card and pay with, let's just say $10, Amex is gonna take a dollar amount and also a percentage of the total transaction. This is similar to how Visa, MasterCard, and others operate, although one key difference is Amex does charge a higher fee, which leads to it not always being accepted everywhere. I'm gonna get into the reason why they can get away with that later on. Their discount revenue is $33 billion. This is the fee that they charge merchants whenever a customer pays with an Amex card. Amex has richer clients, so they need better benefits to attract those richer clients. They get those better benefits by charging merchants higher fees, but some merchants don't really find it worth it to accept Amex cards because they do charge a premium. Let's say you own a smaller bakery. Do you want to take Amex or Visa and MasterCard? Because Amex can charge you more, but are you willing to eat that cost? Because also, people do generally have multiple cards, so why not just make them use their Visa or pay cash? Generally, the rule of thumb is the cheaper the good that they're buying, the less worth it is to use credit cards, so they prefer cash. Their net card fees is basically the annual amount you have to pay to the credit card company. For example, for the Platinum card, I believe it's $700 a year. Service fee and other is basically foreign transaction fees, delinquency fees, which is basically just not paying on time, as well as other stuff. Amex splits up its revenue into interest-related stuff and all the other stuff. We covered all the other stuff. Now let's dive into interest. They got around $17 billion worth of interest revenue from credit card interest and loan interest. $2.2 billion is from bank deposits, which is, well, they put their money in a bank, that bank is going to pay them interest. The revenue over the pandemic was a pretty steady climb, and then just dips midway, but then it climbs again immediately after, but this time just a bit steeper. Let's move on to the stuff that Amex has to pay. So they have to pay $4.9 billion in interest to depositors. Like, you know how Amex got money for depositing money in other banks? This time they have to pay the money out. Interest on their debt is about $2 billion or so dollars. Now that that's done, let's move on to their regular expenses. Amex and almost every other bank, credit card company, and almost all financial institutions know that some people are just not going to be able to pay down their debt. A 0% default rate, that's unreasonable. They use the data from their past, as long as whatever information is out there right now, to determine just how many of them they expect to default. They use that estimate and basically add it as a cost on their income statement, because otherwise it's not going to reflect their actual financial statements. If you guys don't think this is reasonable, let me throw something at you. Imagine you flipping a coin 100 times. Would you expect it to land on heads every single time, or do you expect some tails? Credit card receivables, which is basically the actual credit card bills, and loans expected not to be paid, is $4.9 billion. Member rewards, which is what they use to attract clients, totaled $15 billion, and here are the rest right here. All this leaves net income to be $8.4 billion. Net income over the past 8 years is by no means smooth, but they have consistently made a profit. Here is Amex's return over the past 8 or so years, which its stock symbol, by the way, is AXP. It's compared to Visa, MasterCard, and also the S&P 500 index. It's pretty steady. You know where the pandemic is because there's a dip that all of them have at the exact same time. And then it just rises, and MasterCard does generally separate from the rest. It ends up with MasterCard in first with 372%, Amex in second, 261%, Visa at 252%, and the S&P 500 index with 147%. they've all outperformed the S&P. Amex is a dividend-paying stock. Their dividend yield, as of when I'm recording this, is 1.2%, or $2.80. Although I do have to mention one difference between Amex and compared to Visa and MasterCard is that Amex does also issue cards, while Visa and MasterCard generally don't. Here is another way to divide Amex's revenue by who and where. The US consumer services, which are basically regular people running around in the US, is $5.4 billion. Pre-tax income, by the way. The cards for businesses, commercial services, is $2.9 billion. International consumer services does not even hit the billion mark. It's stuck at $973 million. Global merchant and network services is around $3.7 billion. What they do is basically they license out Amex, they take care of the network, and get merchants on board accepting Amex, as well as some more stuff. Couldn't figure out a better spot to put this in, but Amex does also dabble in travel, lounges, and insurance. Let's start off with the strengths. On the customer side, they are known for having incredible customer service and are synonymous with luxury. On the merchant side, they're known for having very high, rich customers. They have a lot of partnerships with, for example, Delta, the Hilton. Another strength is customer service. When you call them, they do pick up. You don't have to wait for like 30 minutes. This is a little in between the strengths and weaknesses. They're accepted in a lot of places, but not as much as Visa and MasterCard. Now let's move on to weaknesses. Okay, so this one I don't exactly know how to feel about. I got accepted. I'm a student. I'm not exactly balling. So when I applied, I'm like, screw it, we might as well see. And then I got accepted. I started to question their standards a little bit, because how? When I did though, I was so excited because I thought I'd be able to just go into any airport lounge for free and just eat food next time at the airport. But no, unfortunately, the entry-level cards don't give you that kind of access. They are very strongly connected to the economy. When the economy does well, they do well. When the economy does bad, they do bad. That's because they are literally connected to every single transaction. If the either amount of transactions go down or just the amount, like the dollar amount per transaction goes down, they make less money. Opportunities wise, they're gonna focus on Gen Z and millennials. Here's a little clip of their CEO.
We've leaned into millennials and Gen Z. Millennials and Gen Z make up a larger part of our business now. In 2019, it was about 19% of our spending. Now it's about 32%.
Another opportunity is cash use is going down in transactions. In 2015, it was 30%. 2019, it was 26%. 2023 was 18%. This is a positive for the credit card and other card industry overall, because if cash usage goes down, people have to use cards. That's why merchants may just decide that they don't want to take the higher fee card. They just may stick to Visa, MasterCard, and most people do carry a Visa and MasterCard around with them because they're known for reliability. They're accepted everywhere while Amex is not. Cybersecurity is a massive threat. There was a story recently about a third party that was related to Amex who got hacked or some data got released somehow. Amex customers were affected by that, and if Amex specifically gets hacked, they have a lot of customer payment information. That could be bad. Anyway, people, should I make a video about Visa and MasterCard too? Let me know down below in the comments. This is not investment advice. Find that somewhere else. Like, sub, and peace, people.